This is it. The beginning. Consider this the first day of your trading journey. Everything in this course is tested, proven, and absolutely worth your time. Our mission has always been to show you the strategies and the edges that professional traders use and to teach you how to use them yourself. Because when you finish, you won't just know more, you will be more. Test, are we live? Check. Good morning, party people. I mean, it's not that much of a party in the market, unless you own things like, Corning. It's mates. Afternoon. Listen, I'm in the West Coast. I live in California. It's like 9 a.m. over here, guys. We gotta wake up at like 4 something for things to like work out, or at least to, traders be ADD. So they gotta wait for those meds to kick in before things really start clicking, Sorry. Is it TMI? I don't know. But yes, hell of a stock. I posted something about Corning the other day. I love this stock for like many reasons. I mean, yeah, I get it. It's up a lot, but I made a post about it. It's like last week was wild, right? We have, we have this tariff shenanigans, but if you didn't know, Corning is it's like a onshoring play, because it's like if Apple and whoever have to build in-house, they have to bring manufacturing in. It's Corning for those customers. And if tariffs go up, if tariffs go up, but if tariffs go down, it's like a lot of Corning's customers get to sell again or can sell more. So it's like a win-win. I don't know, it's crazy dynamic on that stock right now. He's alive. Connie, I know. I did say 14, but it's all good. And yeah, if you guys saw the little commercial thing, I appreciate you guys sitting through that. But School of Gains is live, and we should be releasing the second season of that iteration. School of Gains, by the way, just if you don't know, it's just like it's papergains.com. Super simple. In the chat, literally just papergains.com. Go to the website, book a call. I spelled paper wrong. Dot. How do you spell paper wrong? It must be early. Whatever. Papergains.com. I think I have like this overlay. Yeah, there. Go there. And check it out. Links get you to like things like the Discord, where we've opened that up. We trade live every nearly day. Pretty much every day. But anyways, book a call with the crew, get yourself into the apprenticeship, and should change a lot of things for a lot of people. But anyways, let's get on with the show. So welcome, by the way. Yes, foundation courses. Listen, like I built that. This is that curriculum that's supposed to help from knowing nothing to something. I started out as an investor, so it's a little bit different for me. But I also took that approach in what we were teaching, from knowing nothing to let's talk about investing a little bit, and then because that's the natural progression for most people to go from investing to trading, to see why. PayPal. Yeah. Unhalted. Did it hold the pump? Is it still PayPal? Is it halted again? That thing looks flat. PayPal gets halted. It's weird to have something get halted on news, but there are halt rules. Let me see if that. Janet. Yeah. And PayPal, when stocks actually move more than a certain percent, so this is 5% in a certain amount of time. So PayPal moved like 5% within less than a minute, yeah, that's going to trigger a circuit breaker on an individual equity. So that's why. Because otherwise, if it was just because of the headline of acquisition, open to acquisition, like, well, I mean, why would that pop? But anyways, let's get on with the show. So welcome, number one, if you guys are new to the channel. If you haven't yet, like and subscribe for sure. We do this every single Monday. If you're a fan of Technical Tuesdays, wait to the end and we'll actually scope out a couple charts. But as traders, it's very important to actually plan out everything before we do anything. And that's what we do here on Mondays, as long as the market is open. And if you didn't know, we do have a big event this week. Actually, we're coming off one of the craziest weeks that was like the worst roller coaster that never went anywhere in terms of news. So again, if you're not following me on Twitter or X, sorry, just follow that. I post my kind of thought updates a lot. And also if you're in some of our trades, I'll give a lot of updates there. You can totally see market rotations are so fast nowadays. You know, if you bet around the market for a while, rotations used to happen over the course of like weeks, maybe months. So not the case anymore. It's like here today, gone tomorrow, because information moves so fast, which is why we have to do our planning like so much more frequently now. So it's hard to keep up with for sure. But here's what we have going on. So yes, we do have the almighty Nvidia Wednesday, which is like, if we were to look at what's up on earnings this week, it's like, oh, is there anything other than Nvidia, which is a massive, I don't know. I'll tell you this out of the gate, there's nothing that they can actually do to the charts right here, right now at 193 or 190. 193 is resistance, by the way, if you didn't catch that. But there's nothing that they can really do to the charts right here that's going to change the trajectory, because the trajectory is definitively sideways. And believe it or not, it's been sideways at the whole market, from the whole market perspective for, I don't know, I mean, all year, which is kind of crazy. We have some headwinds here in terms of seasonality, and we'll get to that today, because I think things like that are going to be very important, especially if you're trying to follow a trend, which is what traders do. And the biggest difference between trading and investing, by the way, is like, well, other than knowing how to use the sell button, traders do know how to use that thing, is that, you know, we can sell short a lot, right? And we'll see, right? So you have to have everyone's perspective from the market participant view to see, all right, well, who's in here? And is this going to be, because we will probably get a bounce, but is the bounce going to be worth it? And I think that's really a bigger question for something like this. Do I buy SoFi now or wait, right? It's about, we're going to get into this kind of stuff. It's about, you know, understanding the market environment, what's moving the market, what are the headlines that are really driving sentiment and therefore price action, and is the sentiment being confirmed by prices? So as an example, this is what we got last week. So I have two oil headlines back to back, and this is just an example of how crazy this is right now, specifically for oil. So first headline, oil falls after Iran calls nuclear talks with the US constructive. Like, so then, you know, oil's being held up, and then boom, like oil jumps 4%. Well, what happened, right? After Vance says Iran ignored key US demands, military strikes are still on the table. And you're like, oh my goodness, this is the roller coaster, right? This is one of many storylines that are going on underneath the hood of the market right now. And it's a very complex environment. So it's because of that, we're seeing a lot of sideways action in the market. And truth be told, I think the best case scenario is not a breakout. It's not a breakdown. Is literally sideways, which is not what people want to hear. Although, you know, certain things have already kind of made some hopefully relative lows or coming to relative lows. But yeah, smash the like button for sure if you guys don't follow this. But and turn the noties on, because every Monday there's a ton of value that's dropped here, plus trades. So what's the other headline? What's the other storyline that's moving the market? Volatility grips Wall Street. These are literal headlines. I just copy paste. As AI anxiety lingers. I mean, this is stuff that if you don't follow the market super actively, these are the headlines that you're reading, right? So this AI anxiety, if you will, is it real? Is it not real? Who knows? Probably not real in the long term. But in the short term, that is the key. What I will say is that the spending is not in question for the market. So the spending of AI build-outs, things like Micron, SanDisk, even my Corning, right? Those stocks are ripping, right? And when you think about it, what's TSM, what's clearly not what's being held up, Nvidia, what's clearly not in question is the fact that all of these companies are absolutely spending a ton on these AI build-outs. This is a generational data center build-out. So when you think of that, think of it in terms of the picks and shovels of the data center. Think of like information overall, right? Like power. Power is everything right now. You'll see that energy sector looks pretty good, especially if you're tied to this specific area of the market, because it's not in question whether or not the spending is actually happening. What is in question is if the companies that are spending the money actually get to see the fruits of their labor before they run out of money. And that right there is really like the crux of the issue. And in the meantime, does your company get taken out? I don't know if anybody looks into it, but like another 7% today, nearly another $30-something. I'm like, this thing, it's new lows, right? Sub 350 now. This is an ugly chart. Intuit, nobody looks at Intuit. It's 8% down on the day again, right? These are UNH type moments that we're seeing across the market. CRM, Adobe don't even need to be mentioned, but things like Intuit that you don't really pay attention to. You're like, holy crap! And what is that rhetoric? And it is this thing. That's literally this anxiety. That's it, right? It's the anxiety issue. Anxiety doesn't mean it's true, right? Just because I think something doesn't make it true, but the market is forward looking. We know this, and the market gets a lot of anxiety at times. And so when you play that tape forward, it's like, well, if some of these companies that are spending a ton of money, namely something like a CRM or even a Meta who's being held back right now, probably should be higher. But regardless, they're like, the question is, are you going to make money from these investments before you run out of money? And in the meantime, what does that mean for me as an investor? Well, just like Netflix falling at the highs, I think I said this a lot. It was like Netflix is going into an investment phase. That's what I'm seeing. Like we are seeing a lot of these software companies, specifically those companies tied to IGV, the sector that tracks the software index, go through a lot of investment phases. And as investors, you have to kind of ask yourself, do I want to take this ride, or do I want to step off the roller coaster for a bit while you go on the ride? And let me see if I want to step back in at a later date when things are a little bit clearer. And that's the question. Literally that overall. Are these companies going to zero? Probably not. Like Salesforce is not going to zero. Intuit's not going to zero. Adobe's not going to zero. But Hoodie's not going to zero. SoFi probably not going to zero. Like that's not happening. But they're in the in the next 6 to 9 months, give or take. Can things be a little choppy? Yeah. But again, this is the stock market. This is investing. This is how it works. All right, moving on. So we got FOMC minutes last week. By the way, I don't know if anybody saw that. APP, perfect. Am I getting quoted? Power is everything. It is, dude. Power is everything. Think about that. Why? Right? What's that rhetoric? Right? That storyline. That's why power is everything. It's not in question whether or not these companies are spending money on this generational refresh of the data centers. That is not in question. Cisco, things like that, they're fine. Intel, which is like this like crazy reversal. I mean, it's alive. But that's like physical commodity type stuff. and they are technically commodities. So if you can find something that's in that sweet spot and has a lot of upside and might not just be a commodity company, you can have a pretty good stock pick on your choice. But that's what they mean by stock pickers market right now. That's what they mean by K-shaped economy right now, meaning like some stocks go up and some stocks go down, and this is your K, right? Some up, some down, and that's K. Fed Governor Barr says the rate cut could come down amid ongoing risk to the inflation outlook. And I'll get into some of the economic data that we got last week. And this was all on Friday. And I made a post and I'm like, okay, this is a wild day. If you don't know about economic data points, you'll look at something called the economic calendar and the way it works. So on the bottom here, this is the main data points that we got last week. So GDP growth rate, quarter over quarter, the advanced look. This is not a final number, by the way. And I will preface this as an investor in my head, I'm thinking, well, this was not a full month, I don't believe, because I think the government was shut down. So I actually think that number is probably off. Probably, keyword. And you guys are giving me a hard time about this, probably. But probably not, probably off here. And because the government shut down. But the knee-jerk reaction is weird. So at first, we start falling. And when you think about this for a second, does anybody know what stagflation is? Like, does anybody know the definition of stagflation? Like the, what's it called? The sentiment in the market, or the phase of the market, if you will. Let me try and see like this comments faster on my phone. But stagflation is like slowing growth, which is represented by GDP. That's growth. GDP is like the economy's growth rate. So if the economy reported once a quarter, that's literally what GDP is. Like that's the growth rate of the U.S. economy. And stagflation is slowing growth and sticky inflation, which is represented by something called the PCE number, which is right here. So the growth rate was expected to be at 3.5. Before, it was 4.4, which is really high. So anything over 2 is good. And then all of a sudden, boom, like shocking moment. You get this 1.4. What happened? That's bearish, like bearish. And then at the same time, you get this PC index, which was, again, expected to be at 0.2, comes in actually double. You're like, that's spending. PCE stands for personal consumption expenditures. What the consumers actually spent is more expensive, essentially. And the combination of these two things is called, like, that specific combination is called stagflation. And that is like the worst economic phase that you could have. Period. End of story. Now, I don't think this is real because I think the government was shut down and we don't have a full grasp on that data. Plus, friends don't let friends make forecasts based on GDP rough numbers, which is what this is. So I wouldn't actually trust that. But the market in that moment and right now is actually looking at that like, oh crap, what's happening? And that is another thing that we didn't have on the docket coming into it. Now, I don't think it's real, but when you look, that's what the numbers are. That's only a month over month. And again, these are kind of like implications. But there is a very good trade in a stagflationary environment. I actually don't even know if I have. There is one trade. Do I have the quadrants on this slide? I used to have the investing quadrants. I do not have it here. Oh, yes, I do. Look at that. Historical asset class performance. So stagflation. There's one trade in that situation. And that's right here. Gold and commodities. And what's doing good right now? gold and commodities. Holy, what? Does this make sense all of a sudden? Okay, cool. Put these things together. By the way, we teach this stuff in the apprenticeship. But, and there are 4 different types of like phases and we have a couple transition phases, but this is generally speaking, I think this is like, it said 1973 to 2020. So this is 50 plus years of historical performance by asset class in the 4 primary environments. But so why is gold and some of these commodity plays, my FCX is actually doing all right, doing good? Because that is the trade. And I think that's been in the markets anyways. It's that flight to safety. It's all that kind of stuff. Do treasuries do okay? Yeah, they do, but just barely, right? Stocks don't do great, but this is the only one that over the last 50 years that's red. Again, I don't think it's true. But if the market believes that it's true for a very short period of time, then that's what happens. So anyways, let's go back to that. And then after we get all of that, it's like, boom, the Trump tariffs. And you're like, wait, I was super bearish. And then boom, this is bullish because Supreme Court nixed Trump's crazy tariffs, which is IEEPA tariffs. And IEEPA tariffs, by the way, those were the most severe ones and the ones that Trump was using. There are other tariffs in place. If you don't know, again, I made a post about it, but the other tariffs are at, I think, 10% cap, and he can increase them to 15% globally. And so that's why you'll probably see a lot of these headlines. Trump has increased global tariffs to 15%. Well, in truth, that's only valid for about 150 days to do that. So it's a temporary thing. It's why they didn't go that route. And every 150 days, I think they have to do another hearing on it. And some countries were well above 15%. So that means that a lot of the tariffs come back down. So you have this economic underlying story that's like kind of all of a sudden more worrying, more concerning than not, possibly because of bad data. And then at the same time, you have this, oh, boom, all of a sudden, all right, well, Trump tariffs are all of a sudden better than feared. Because before it's like they could have done whatever, but the worst is more or less there. What that should tell you is that we've already, basically this ruling kind of put a cap on the effect of the Trump tariffs to the market. So I don't think that's going to be a big deal anymore moving forward, because we know more or less definitively right now that they were already as bad as they were ever going to get. So from here, also, you can look at this and say, well, they should only get better, right? It's temporary for now, but it's going to be every 150 days. Are we going to get some clawbacks? Probably not, right? Trump, I think, said he's going to be in the courts for like forever, many years. What was this decrease of 16.9? I don't know. Trying to catch up. Do I use bonds? I mean, there are very specific things that I can look at. Right now, because of where we are, I don't believe that the bonds themselves are that important. But what I do think is important is the rates, right? And so, which is bonds. So this is like 2-year rates, which is what the Fed mostly controls. By the way, the Fed does not control all the rates. They only control their 2-year bond. And what you do want to look at here is something called the CME FedWatch tool. You could just Google that, and that will tell you what the market is currently pricing in right now. So what does the market think that the Fed is going to do for the next series of rate movements, whether or not it's like a hike or a cut or a pause? We were sitting at 318. So that's 318 is the next FOMC meeting. We're like 96% right now. This is current, and I have this as on the right. I have this a little bit smaller. It's the past. So about 2 weeks ago, I took a screenshot and I'm saving it here. But I want to show you really like what is the difference. The difference is that before we were at 82% of a pause, which is, all right, well, of slight 17.8% of possibly getting a cut. That's completely off the table at this moment in time. So you get these data points, there's zero shot. This is 100% priced in that we're not moving rates for at least a month, right? And then you get into April, which is 82.1% of a hold. That was 65 before. this is what happens when you get this kind of data, these shifts in sentiment. When you think about bonds, I'm not looking at the price of the bonds or really the yield. It's a forward-looking market. So I want to look at what does the market think we're going to do moving forward. And there's a very clean tool to do that. Just, again, Google CBOE FedWatch tool. You'll get this. This is under something called the probability tab. And this is what the market is pricing in right now. So we go from 65%, basically 30% of a potential cut in April to like not happening again, right? You're like, not happening again. Oh my goodness. And there was a cut priced in January, February, March, April, May, June. For June, there was a cut priced in for June. And what just happened? Poof, off the table. And that is the environment that we're in right now. Before, we had basically only 2 cuts priced in for all of 2026. So 2027 starts here. And 2 cuts. 1 here, 2 here for all of 2026. We still have 2 cuts. The question is just a matter of when. And so the market had essentially pushed that back. We have 2 cuts for all of 2026. And then all of a sudden you get this wishy-washy that showed up in 2027. I'm like, whoa, okay. So why are we doing this? I've seen actually this move, and this is about Warsh and what he says when he comes in, which we don't really know what he's going to do. So you can't really speculate that far. I think realistically, you can just look up to the end of this year. And to do that, you really just look at, to January. So just these first boxes, right? So these areas right here, up to January. So January would essentially give you what is the rate expected to be at by the end of the year. And so yes, we still have 2 cuts priced in. We have potentially 1 for next year, but the when moved from June to July at best, which is only 45%. And so that's what happened, right? We get this data, and this movement here is what moves the market. Now, I did say I'd check in on some other stuff because the question to us is, as also investors and maybe traders, to identify traders identifying what environment we're in, investors to decide, is this a buyable dip or not? There are 2 things that come to mind, right? So let me unhide one of these slides. One is the S&P 500 seasonal seasonality. So when I said we have seasonal headwinds, this is what I mean. So the market moves on 4-year cycles, if you didn't know. And that 4-year cycle is based on the presidential election. And I've been saying this over and over and over and over. I think that this year is the dip by year, but in September, late October, I want to have a lot of cash, right? Because I think that's the big dip, right? And so seasonally, get this, right? If seasonality is on track, and it's just a generalization, so it's not 100% accurate, and I don't treat it as accurate. It's not like this is how it's going to work. No, it's definitely nuanced and can be a little bit off. February, if you didn't know, is the second bloodiest month of the year, aside from September's. Now, we are right here. So this is March, actually like March in here. So we are coming into March. We usually get a little bit of a bounce into what's normally like July. So June, July, here's June, July. And so normally June here, big bounce into July. That typically happens. The difference between a midterm election year and the rest is this June, July kind of bounce. And so we're going to know really soon, like, is this dip buyable? I think it's very rough right now because you could get, seasonally speaking, a little bit of a bounce that ends up being something that you should have sold into. So this year, if you're going to do a February dip, it's got to be ultra light. But as an investor, you can do it, right? End of February, end of March, somewhere in there, in the next 4 weeks. And maybe we get a little bit of a bounce. But the next bounce that we get, assuming we get another pullback, Well, whatever. The next bounce that we get, if we get a bounce, what's most important is, do we actually, this is so funny how this works. Do we actually make new highs? Because if this is our prior high, which this is fairly freaking accurate, the next high doesn't have to, but in order for the trend to actually stay alive, you want it to actually make a new high and hold that new high. So if they don't, then we're probably, from a seasonal perspective, in a little bit of trouble. And that's the seasonal headwinds that we have. So 30% cash, it depends. From an investing perspective, as an investor, you probably have a job. Like you probably have another job. And this is another big differentiator between investors and traders. You guys, I don't have another job. Like a lot of the people that we'll watch streaming, they have like a 9-to-5 job. Listen, it's 9:30 here on the West Coast in California. I am working at my full-time job. Just so you know, this is my job. I don't have another job that I'm going to go to after the stream is off. And so like so because of that, an investor works at a 9-to-5, W-2, whatever, you own your own company, whatever. And then you're depositing, you're making more money through another avenue. A trader, a professional trader, this is our money, right? So like we have what we have in the market and it's never going to change. Like I'm not depositing money from some other job. I have to make all of it compound, which means that I do have to trade both directions sometimes, or I have to definitively step out of the way. And so from that perspective, I have to know that this next move is super important, right? If we get a bounce, which I would have assumed that we do, and we have had some bounces, does it make new highs? So far, it has not. And I think that is the biggest. I'm gonna have to get another job if we crash. I mean, it doesn't. Here's the other thing, guys. Let's be real. Does that look like long term? No. Like this is a very short term blip on a road from a 1, 2, 3, 4-year cycle. So from an investment perspective, February, September, it really shouldn't matter. But investors should be begging for lower prices. And that's also true because this is the dip to buy into the end of this year that is going to get juicy. Now, I saw someone ask, I'm getting 1,000 shares of Microsoft. Am I? This is my boy. This is Carl. He's super active and server. I like Microsoft, but if you know me, I'll tell you that the Microsoft buy range is down to like 375. And it might go lower, but we'll have to see when we get there. Right now, not yet. It's a little bit early. I'd at least want to see that bad boy holding over 404, which is actually a pretty important level. And not three. Well, oh shoot, we're 380s. I mean, here's what's true for the crew. If this is what we have right now, I don't know that we're going to be, any dips are absolutely buyable from an investing perspective, which means 3 years or more. So if you buy a dip, think about it this way. Let's say you buy a dip here, right? And then it goes down on you in the same year. And then you buy it again here, but heavier. If you have a 3-year time horizon, this is September, by the way. This is year 1, year 2, then year 3, right? Which this would essentially be year 3 over here. There's nothing wrong with that. Absolutely nothing wrong with that. But if you buy a dip now and you think that it's going to go up in the next, 6 months and it doesn't, I mean, no, you're trading. And so that distinction is here where we need to think about as traders, if you're a trader, where can it continue to go lower? You have to be totally open-minded. Think about what we just talked about. There are areas in the market that are not in question, and that is the spend on the data center. What is in question are the companies that are spending the money to build those data centers. What's Microsoft doing? It's like center stage. It's not quite. Of the Mag 7s, Microsoft is as close to ground zero as they get, which is also why it's technically like the weakest. Do I see a little bit more downside? I do. I already bought it, by the way, higher, and I will buy it again lower. But this is me, right? So my investing hat, I'm buying in here, and then I'll buy again in here. I'm not going to definitively snipe the low. Like if I buy it again at 375 and it goes to 350, I mean, do I care? No, right? Because from that perspective, I'm thinking 3 years out. And in 3 years out, oh yeah, $600 or more, baby. So the lower I can get it, I'm a happy camper. But in the meantime, can it go another $30, $40, $50 lower? I don't care, but neither should you as an investor. As a trader though, this is a very tradable thing, and I can make money on the downside and take that money that I make and put it in my long-term investments. And that's super important. But that's where we are. This is the S&P 500, by the way. There are multiple indexes out there. And another one that we've been talking about is something called the January effect. Now, it's the end of February, and I want to talk about this a little bit. So the IWM, or the Russell 1000, Russell 2000, Russell 1000, this is the January effect. These are the small cap stocks, and I think these are where we are. Some of these things are actually doing okay. The ones tied to software, not doing so good. But as an index, it's actually doing all right. IWM specifically is, if you didn't know, 50% of the Russell 2000 is made up of a combination between regional banks and biotechs. None of those two things don't have anything to do with software, right? So I think it's like, somebody correct me if I'm wrong, I believe it's like 30% regional banks, 20% biotech, and those two pieces actually make up half or over half, I believe, of the Russell 2000. And because of that, it's been super resilient. Have we seen a massive January effect trade? No, but it's one of the most resilient indices. Both are correct. But we're coming into the end. So the January effect, by the way, is over. IWM's had a decent little move from, I think it was 245 up to 270. That's pretty good. Actually, how much is that? Oh yeah, that's a 10% move within a month or two. That's just in January. So we've gotten our little move. Seasonally speaking, oh my God, this mouse. We do have a little bit of another blip on the radar. I think this is a 100-year seasonality, by the way. It's 79, so another 50-year. We may or may not get this one, so I'm not going to stick around. I'm done with the IWM trade because I think it's just too high risk based on the environment. And the rhetoric that we've been talking about is going to define the environment in terms of the catalysts and potential sentiment. And then we were looking for price to confirm that is the sentiment of the market. If you are watching some of the apprenticeship videos, especially in the foundation, you'll know that there are three things that we need to look at in terms of the market as a whole. Three pieces of analysis that we have to do. One, as investors, you do your fundamental analysis. Two, as traders, you do your technical analysis. And three, both traders and investors need to do the most overlooked type of analysis, and that is something called sentiment analysis, and that is really going to define what environment we're in. And so we might be in a shift right now, and that's my kind of takeaway from where we are. I think it's very close to being a full blown shift. But last week, I will say that the bears kind of failed to make it happen. So it's still on watch. It's TBD. We're watching. A lot of times better to kind of sit on your hands. But so what do we have to look forward this week? Today, nothing burger. Nobody cares. Tomorrow, I did not realize this until I was typing this slide up. I was like, tomorrow we have a State of the Union? Are you joking? I didn't know that. So here we go. Is it Liberation Day 2.0 in real life? I don't know, but the market is going to be on edge. And if there's one thing I do know, that is that the market hates uncertainties. Now, Trump's State of the Union here, like I said about the tariff things, that's probably what he's going to be talking about. I think it cannot be that bad, right? It cannot be worse than what we're coming out of. I think that's true. So in the near term, if there is a reaction off of this State of the Union, unless it's like we're going to war with somebody, in terms of tariffs, I think the worst of the tariffs are over. So anything outside of tariffs, the tariff headlines basically come off the table for me. I think the worst of that is over. I don't, and you'll confirm this by watching the headlines. I don't believe that we're going to have any tariff headlines that are really going to move the market that much moving forward. That's what I would say. At least not sticky ones. So that's what we have tomorrow. I don't know what time this is. I believe it's after hours. So it might be like way later in the day, which means that the setup into Tuesday from here to tomorrow might be a little weak. So, because we have this uncertainty coming. Aside from Nvidia, which is, I'm hesitant to say that too, because Nvidia's not gone anywhere. It's still at a 190 level, which 183 resistance. I think it's like 170 support. We didn't quite get there below 170 last week, but it was just there last week. So even if Nvidia drops $20, like I said, I don't think there's anything that can happen to the chart. And even if Nvidia goes up, I don't know, $30 and gets to 220, it's still not a lot that can happen to the chart. And it doesn't move that much as of late out of four something. How many trillions of dollars is Nvidia right now? $4.6 trillion company. You're not getting this to turn into a $6 trillion company overnight. Not happening. But it's very much stuck in limbo. So, and is this going to drop below a $4 trillion company overnight? I also don't think so. Right. So like, I'd probably be into selling some straddles there. Maybe like some really juicy ones, quite frankly. I'll probably take a trade like that. But just for Nvidia, which is also, by the way, 8%, give or take, of the S&P 500. So it's an extremely influential stock, which is why that's the kind of thumbnail today. I think they're going to do great. Jensen always has a magical way of like tiptoeing that Goldilocks sentiment of like, they can't do too good, right? Because then the market is like, well, what do I have to look forward to? They can't do, bad because they're like, oh crap. But even if they did do bad or not as good as expected, my gut on this is that Jensen being Jensen would in the same breath come out with, let's say if the report was not, if the numbers are not as good as expected, maybe you get a quick knee-jerk reaction, and during the call, Jensen gives the market another thing to look forward to that is brand new, out of left field, and we're right back to where we were. So quite frankly, I don't think that the market's, I don't think this one's going to do a whole lot, which keeps this like index kind of pinned exactly where we are. Nvidia is not having a horrible day, but it's not having a great day. It's exactly where it was. I don't think that Nvidia has to fall for the market to fall either. If Microsoft takes a hit, say something like Google, all of a sudden, who's been holding up the Mag 7, doesn't do extremely well or loses like 290, that plus Microsoft plus a Tesla, those three could outweigh Nvidia holding its own. So I think it's a weight. I do like straddles. If in terms of what that is to determine whether or not something like that it's selling both calls and puts. To determine whether or not something like this is worth it, you have to compare what the this is an options trade, not an equity trade, by the way. You have to compare what the options market is implying that the net dollar move will be for Nvidia after the report, and you take that implication and you compare it to what's true, meaning what Nvidia has historically moved over the recent series of earnings reports. So as an example, if the market thinks that Nvidia is going to move $40 on earnings, but Nvidia has never moved more than $20 in the last year and a half, or has not moved more than $20 in the last year and a half, then it would be a pretty straightforward assumption that they're overpriced. And even if Nvidia moved $30, I'm probably going to make money selling premium or selling the optionality that people purchased for Nvidia to make an outsized move. But you have to do a real comparison of what is implied percentage-wise is nice, but I factor into dollars, and then what's historical in terms of dollars. So, usually, by the way, later in earnings season. So this is what we have. This is where we are in terms of earnings season. So I do track something called the Dow Jones, which is the Dow 30. In terms of earnings so far, we're in the Q4 quarter. It's not horrible. So 25 beats, only 2 misses. Amazon and American Express. Everybody else has been beating. Earnings are not bad. Later on, towards the end of earnings season, we start to get a lot of muted moves also. So Nvidia happens to be right there now. Just know that's normal. I just don't know that a lot of the moves are basically because a lot of their peers have already reported. And so at a certain point, you start to see, things have already been implied and a lot of moves have already been made. So seeing progressive moves or like additional moves beyond what might already be priced in is a little rough. I didn't look at one of these financial ones. So I actually don't typically do straddles. I do something called calendars, which is like selling the very near term option and then buying a longer dated option. I do that quite a bit. That's like a staple earnings season trade. We used to run webinars and stuff on that. Speaking of webinars, I will do another one for NFP coming next month because we'll get another NFP in March. And so we'll do a webinar around that system as well. But this is what we have right now. I think it's just Nvidia. So technically, we've had 25 of the 27 big names report, and 25 of the 27 big names that have reported have beat expectations from their stated areas, except for Amazon, which sucks. But it is what it is. On deck, this is what we got. So it's just Nvidia. Salesforce, Trade Desk in the dumper. Snowflake, not so bad. It could be a lot worse. It's not great. It's not good. I need to take that back as I pull up the chart on the side of my screen. All of a sudden, just software, man. I did not realize that Snowflake was at sub 160 already. Holy crap. This thing was 270 just the other day. It's brutal out there. The software stuff, they are not digging it. Like not one bit. Oh my goodness. My depot, the Home Depot. I mean, I think I already had my my trade. There's a lot of questions about the home building space right now. What I will say is that, typically if you buy late Q4, at some point by late Q1 to Q2, you're green. I think that trade has already played out. So if this comes back, let it come back. And then summer is their better season. Mercado Libre, not US. Navitas, I don't know. Kava, probably no good. I mean, just software. Oh, wow. Workday tomorrow. Kratos tonight and HIMS tonight. HIMS is getting no love. It should have had at least some kind of bounce. No love. Kratos tonight. I own Kratos, but it's also ultra high beta. I don't have a big opinion one way or the other. Ooh, DigitalOcean, our board Cypher. DOCN is actually, that's a cloud provider and servicing company, services around that. So, that's already made a move too. DigitalOcean's made the move. So the question of, are they spending on these things? They're a beneficiary of that. That move has been made for the most part. They're already pulling some of that back. So TBD, probably do okay. For solar. I mean, geez, Circle, rough. I think TJ Maxx actually takes it on the chin on earnings every time and then does well. So I would expect a pullback as per usual and then a quick recovery as per usual. I mean, these are pretty much best of breed in their class from a stock perspective. Pure Storage, it's going to be a beneficiary, but something like Pure Storage is it's a hardware and software provider for the space. It's not bad, but their margins are probably going to be not so great. Zilly finally selling, I don't know. But before we get into the charts, then my Dell. Intuit's just getting destroyed. And even the one thing that I'm like, okay, this is getting dumb are these security companies like Palo Alto, 145. That's a best of breed. But I mean, I could see it coming down a little bit longer. I think anything that you buy, if you have a 3-year time horizon, zero question, will this be higher in 3 years? But will this be higher? Will these things be higher in, 6 months? That's in question. So from that perspective, I don't mind anything from a long term, which is why we're in this really weird spot. Because like from a long term perspective, I think you're okay, but I also think that they could come down more, and it could be substantially more. But regardless, if it's here or then, in 3 years from now, I think we'll be fine. But between now and then, I think you have to be prepared to buy lower also. Some things like this, you can question that, right? Like Google is at very much all-time highs. I think from inflation alone, the answer to this question would be yes. So just from that perspective, if CPI is sticky, it's sticky. So just from inflation alone, I guess the answer is yes. So I'm not really worried about that. The thing about, always DCA and things like that, in truth, that is in regards to the S&P 500. A lot of stocks themselves, individual stocks, they do not actually recover. But the index itself, you do your DCAs at SPY or QQQ, definitely. Yeah. So I think this stuff, not all companies will recover. The all things go up in time heals everything sentiment. That is in regards to the indexes. So for SPY and QQQ, not all things do recover. So you have to be that does include IGV. That would be an ETF. So that works, right? But if it's like, I actually don't mind Snowflake at all as a company. I actually like Snowflake as a company, believe it or not. But like it's so bleeding edge sometimes that or it was, does that one specifically survive 10 years from now? You don't know, right? You just don't know. But SPY will be here. SPY will definitely be here. Nvidia will probably be here. I'm not really worried about that. Salesforce will probably be here, right? Adobe will definitely be here. I don't think they're going to zero, at least not in the next 3 to 5 years. But who knows? So before I get in the charts, though, we're going to check out one spot, one of our good friends that does give us a little bit of a second opinion in terms of where the markets are actually going. Her name is Miss Cleo. So if you're not familiar with this part of the show, again, it's for comedic relief, if you will. But it's crazy how accurate our friend is. She gives us a weekly forecast. And we call it the T in TA. That stands for, of course, tarot. And this is a tarot reading for the week for the stock market. So let's give her. All right, fam. So this is how it works. She gives us a tarot reading. I'm not, it's whatever. She's wildly accurate sometimes. I will say I've been inversing Miss Cleo a couple times and it's been working out for me. So she's, But anyways, let's see what she has. All right. This is the first time, literally the first time I'm looking at this. I don't know. I don't think there's an actual Joker card, but that dude looked like a Joker to me. Whatever that is, it's the Two of Pentacles. He kind of looks like a Joker. So is this week a whole joke or not? I don't read these really, but I've seen enough of these to know that okay, this is not really that great. This is Six of Swords. Clearly, it looks like we are leaving the city of probably gold to maybe better pastures. I don't know. And then we're going to bury our gold potentially on Tuesday. And apparently Wednesday, our hearts are going to get stuck with three swords. So yeah, I don't know. I don't know, man. That's Nvidia. But then we have more coins than we did before. So what is this? 7 coins, and then we have 10 coins. These are coins. And then we have 1 cup with a fish in it. I have no idea what to think of this. So what does that mean? I have no idea. I have no idea what that means at all. But let me just read this, whatever. So the theme card, that's how it works. We get 1 theme card for the week. That was a solid reading, right? Solid. Anyways, we get a theme card for the week, and then we get a card for every day. Let's see. So, and she does crypto also. I only do the stock one. It'd be just too much to read. I want to highlight the fact that these cards match the 5 crypto cards. Okay, fine. This is incredibly rare. They match the 5 crypto cards. I don't think I've seen them match the cards. And the cards are definitely sending a message. Okay, what's the message, Miss Cleo? So you think there's a message? Try and listen. I'll do my best to share what I hear throughout the week. Now, to the 2. It's a low energy begin again type of card that suggests we're walking a tightrope as we try to navigate the path ahead. Did we breach Friday's lows? No. So we're inside yesterday's range. Well, that's low. No, we're fine. We're retesting at NFP levels. I'll show you that in a little bit. Okay, so I'm trying to listen to Miss Cleo. It's a low energy begin type of card that suggests we're walking a tightrope as we try to navigate the path ahead. Price action may be stingy, and we may struggle to find clean direction signals. So we're going to go sideways. I'd suggest that you stay patient and let the trades come to you. The good news for bulls is that it does have a green bias. All right. Let's see how it plays out. Yeah. All right. So Monday, that's today. See how she did. This card represents passage into a new regime. We're cutting our losses and moving on. So the bulls, okay. Last week was mostly recovery from the lows and dips were bought, but weakness lingered underneath. True. Does that mean it's time to cut our losses and go short? Smart money is holding. She's probably looking at flow. I would not really lean into that, and they'll want to monetize those. Maybe this is the day for that. I mean, we're at the lows. We're at Friday's lows. We're barely lower than Friday, just barely. Friday's open. Tomorrow is the 8 of Pentacles. Majors last week, 6 yesterday and 8 today. I think she meant this week. This feels like mean reversion. Haha. Does that mean up? This particular card represents hard work and diligence. And unlike the crypto version, it loves trend days. So tomorrow she's calling a trend day, Tuesday trend day. Wow. So my guess is mean reversion trend, which means what? Back to the highs, back to 690? I don't know. But don't go all in until the direction is clear. Then you can chase it. Okay. I think I can trade better than her, but she's doing the forecasting. Now it's 683. This is Wednesday, the hearts, the 3 of swords. The direction is getting murky and muddled, which we can thank the theme card for. This card is supposed to bring heartbreak and suffering. Oh! But oddly enough, it prefers continuation to mean reversion. Perhaps Tuesday action lures traders into reversion play. I'm not sure. All right, well, I'll just say right here, right now, this should be the low of the day from what I'm seeing on my charts. And we could start heading back to where we opened over the next day or two. Who knows? This is one of the days to fade retail in general market sentiment. Okay, so Wednesday, fade retail and general market sentiment. Yeah, because if we get to the highs again, that's a short because we're not going anywhere. That would be totally sideways. Thursday, 10 of Pentacles. Sheesh. The spread now says 6, 8, 3, 10. Back and forth we go. Yep. Downside is going to have more momentum. Looking for topping or bottoming action near a weekly higher low. The play isn't to be long or short into today. I might disagree, but instead to fade this one on Friday. Okay. See a page coming with which further solidifies that expectation. What's the page? Friday's the page of cups. Early morning news headline. Okay. She does this shenanigans and I'm like, how are you going to call out a news headline before news drops? I don't know. Look for an early morning news headline. What could news be? I mean, I don't know. That moves all markets in tandem. Likely leads to a gap opening, which you should not chase. Cool. If it retraced Thursday, she's literally calling Miss Cleo. I mean, you need to call me because like this is a wild call. If you're going to call a crazy news headline of Thursday night before we're there, that's wild. Okay, if it retraced Thursday's close, then take profits early and use that to close your week out. This card should bring a trend. Greedy traders may be okay chasing it, but I don't recommend it. So what's a recap? Stocks are less clear than crypto, okay, but should still be manageable. Expect a lot of back and forth and a great environment for day traders. So if I go back to what your theme card says, I'm trying to listen. What I heard was, what'd you guys hear? I heard iron condors. I heard we go nowhere. Literally. A lot of trappy price action. That's what I heard. But let's get into it. So my first look out of the day is typically on a 30-minute time frame chart. You guys go ahead and drop some tickers if you want. We'll go a little bit longer today. These little boxes here, that's what I have for support and resistance. And I will just, that's actually, sorry. This is where I would like to buy is that lower box, the big green. And then the actual support is this area here, which is like little green. It's light support. But if you're a trader and you're looking at this, it's pretty straightforward, but I don't need, I do this thing called NFP, and we'll teach it again come February, but come March. But I'm a firm believer that is a fundamental event that creates your technical, that creates your technical trend. What I will say about that is how you read it is important, and not many people are super adept at reading it. And so that's kind of what we've really established. So if this right here is the February NFP day, this is the day that we got our most up-to-date non-farm payroll data point, which is what kind of drives market sentiment and where the market thinks that the Fed is, how the market thinks the Fed is going to react moving forward. You just mark the high and the low of that day. It's literally that simple. And on this day, what we're thinking after that is that we're thinking, did we just see the high or did we just see the low for the entire month until we see the next NFP report? And what is clear is that we have seen the high. So we have seen the high for February. And usually what happens from there is that we go, not usually, the rule set says that we'll go to the next level below it. So that being the low, the next level below that is 682. That's your good news. I'll make this big. And let me just change the settings here. So the good news is that the first downside target, we're sitting there right now. Now, we opened above this level here for December. If I get to open below 682.20 this week, what I need to see is I need to see a opening below this here and some kind of rejection. in the following 24 to 36 hours, we should be at 675. This is okay, just okay support. But I do think that I will tell you, like with a high degree of certainty, that if we open below 682 and close below 682, probably within that same day or the following 2 days, we'll see 675. And that will be that first downside target. If we do the same thing, we'd have to see it open below 685. There's a small little gap in here. 668 is the low end of this general support here, and also aligns with this point of control, which is we would technically be a breakout and retest of this general area. So meaning, like, if this was resistance here, we have a breakout here, a retest here that held, then we'd see another. We've seen that retest a couple of times. I don't know, 1, 2. I think the third time holds, but if we start to get a fourth attempt, no good. So I think that we could see this 670, but from there, if we don't get over where we are today, if we get that breakdown, that's not going to hold. But we're a little bit too early to say if any of that is actually going to happen. That's too much speculation from a trading perspective. But I could definitely see that happening. The issue here is that this is your 200-day simple over here, and we are gonna, if we go any lower at the index level, both for SPY and QQQ, momentum here to the downside will shift, like will begin accelerating down. And this top of this red box, the question of, did we see the higher low for the month? So far, we have. Can we test it? And that still be the case? We can test it, and we might still be that case. But any lower, we're in trouble. I would say this 668 is like as low as I would like to see it go to hold any kind of general trend. But again, if between now and June we're below 668, I know we're in a midterm pullback here, regardless of what the headlines are. And if that's the case, who knows? All bets are technically off. If that's the case, then I have to go. And I would have to start thinking about like legitimate retracements, which I think is this. Yeah, this is like a legit retracement. That's 600, which I do believe is the 200-day simple moving average. So, 200 days way up here. That's too deep. 600 is too deep on this. 600 is a little too deep. A retest here would be 613. But none of that is true unless we get like a major pullback. And that would be basically the equivalent of one of these. A small dip, because that would be like here, and that's the big long. So that wouldn't be until like September. And if that's the case, that's a big nasty long. But that ain't happening anytime soon right now. But we'll know come like June. So between now and then, it's like, I think we could chop a bit. And if we chop between these general areas, then that's probably what Miss Cleo is saying. And I think that's very much in the charts from that perspective. So anyways, that's SPY. What I will do, I'll do one more thing. And let me get the average weekly ranges. So believe it or not, an average weekly range does put SPY at 702. So it's possible that if Nvidia and all of them have this massive recovery, we could get to, on average, a move for the S&P 500 index is possible to go up to 702. And I have a little marking on my chart because I have these measured out. On average, it's also possible that we see 660. So that's the same move in either direction, actually, from the open. Let me go from the open. From the open, where did we open? Look at that. From the open, that's my downside, 668. So this week, what do we have? I have any 14-day iron condors, 665 to 705. I would totally, that's a normal range. And to be stuck in here, no big deal at the index level. You could probably trade a little bit, but I don't have a trigger for that. Anyways, that's why below this, then it's like all bets are off. We're not in danger of losing that this week, but after this week, I think it's potential that the trend really starts to show itself. In terms of the cues themselves, again, 30-minute chart, this is it's not looking good here. This trend is already broken, and we are starting to lose any upside momentum. And at the same time, we're starting to gain downside momentum. So, at this point, this is kind of where we are. It is what it is. This is like the demise of the Mag 7 minus Google. But I'll do the same kind of trick here. It's 601. So again, February, I have this measured out. So this day right here, that's the February NFP day. So this is the day that we think, similar to SPY, you want to start thinking to yourself, did we just see the high or did we just see the low for the month? And again, in fact, in this case, we saw the low. You can see this if we open below this 606 area, we should see 601 pretty quickly. And if we start opening and closing below 601, so you're looking at one range here, one big range, that's to 581. And then if you ever reclaim, you do the same thing, open and close above any of these levels, you have the same levels to trade in both directions, mind you. That's how trading works. At that point, I also have a December number here. I'll just make this a little bit bigger, just so you have it. But that was the February high, 617.50. And then I'll just play this forward just a little bit. And so this is the following day. We get this. Did we see the highs? Yeah, we saw the highs. Then boom, you have an open, not below, you have an open above and close below, but you've already hit your first target. So at this point, you need to see these open and closes below 601 to think that we're going to 558. And that I don't think that we actually got. Or did we? No, open, below, close above, open, below, close above, open above, close above, target, open above, close above. See this? It's 601.39. That's the level. And it's 607. Here we are. We're battling with these levels. This is literally how it works. But if you get this, Qs would be the next one to have a large move if we do actually have that full trigger, which we have not had a full trigger below. So that's this one saving grace, but that means that we're still stuck battling with February's low, February's non-farm payroll low. And so I'll just show you what that looks like. This is our indicator, by the way, if you want. It's on papergains.com. You can just grab it and apply it to any chart in TradingView. But we're battling with this 607, which that is resistance. So 607.69, we opened below today. We kind of hit it. I would say not to the penny. This is a 6-minute chart, but I mean, pretty dang close. And so when we do have that, we just kind of assume that, hey, look, we're going to go to 601s. And I think that's where we went. We're not having so from here, you could trade the upside. I'm not joking. Like, you could trade this. So here you go. But this is for the next couple days. And it's been super hard to get a good trend. It's been super hard to get a really good trend we used to be able to find trends that would last weeks in a good market, in a good trending market. Nobody's seen that. right now. And the reason you're not going to see that is because we're not in a trending market. And that's what I would tell you right now. So when you're in a range bound market, which make no mistake, that's what this is right now, you have to assume that both support and resistance holds until proven otherwise. So that's the weird part. So if you're not familiar with this kind of trading, it's a little bit more advanced, but this is how it works. This is support. And so I'll just tell you right now, expect support to hold unless you have something that's going to tell you otherwise. And this is resistance. Expect resistance to hold. If you did that, this entire range, you've been making a ton of cash. And maybe that's what Ms. Cleo is talking about. Because this is the definition of a day trader's paradise and a swing trader's nightmare. Because trying to find a trend that lasts more than 2 or 3 days, it ain't happening. Right? It's just not this week, maybe next week, but when my crew knows, you'll get it if you get this open and close below 601. And quite frankly, the move this direction could happen very quickly. But until then, nah. The hardest part here is having seen this tested so many times that expecting it to just trading for the breakdown would cost you a lot of money, right? Unless you can just like set it and forget it and know that you have a hedge on, and that's fine. But yeah. Well, you guys are in the chat. GLW, we talked about why. Look, so this is our indicator. It's like $50 or something like that, and it goes on all your charts. This is the biggest market hack I've ever found in my life. Nobody has found it like I found it. This is the same indicator. Do you guys see it? Like, anyways, it works. It was not designed for individual assets, but it doesn't not work on them. It's not back tested, so I can't give you any stats on this, but it was back tested to like 88% probability of being accurate at the index level to defining the high or the low of the month within 1% since inception, since for like the last 200 years. Like that's crazy. There's no stat out there in the market that is that strong. Anyways, off my soapbox here for a minute. But was the low or the high in for the month? I mean, the low is this is what I mean by within 1%. Pretty much in for the month at 126. And yeah, unless we lose this 126, it's not going lower. But if we do lose that, it is going lower. That's all I can say, and that's what I know is true as a trader from a trader's perspective. From here, we default to staying long. But this has what? This has the storyline. It has both the onshoring and tariff. It's got the tariffs trade on both directions. It's got the data center build. It's got freaking data center and like commodity things, which is pretty crazy to say. But yeah, anyways. Watch it go down tomorrow now that I saw all this stuff. But here, I think I'm good from this perspective. I would just say other couple things to note. IGV is going to tell us whether or not the software sector is going to bounce. It is not. It's not going to bounce. 82 was like that level. We're at the lows. 1, 2, 3. I kind of expect this to fail. It is what it is. Do you expect it to fail a lot more? No, because we're just gonna, again, this is all the apprenticeship stuff, and we'll tell you about this later. On the right-hand side of my screen, I get asked about this thing all the time, what that is. It's kind of like a roadmap for volume. So you lose 80. We expect to be on a general trajectory down to 68s, right? Or sub 70. So that's what I would expect this to do. We're trading what we call peak to peak. And within these low volume, this is volume. It's not time and price, that's different, but this is volume. Within this low volume, say pocket, that is where things start to accelerate a little bit. I will also say if I was to assume that this goes into a retracement mode, I have some confluence down here to say that about $71 is a sweet spot for retracement. So, we have a lot of things. You have weird psychological things, a stock that, breaks over 71, goes to 120 thereabouts. If you can't hold 120, then you usually go back to 71. This happens all the time. It's actually like a psychological, like a subliminal Fibonacci sequence. Like, it's wild, but you'll see it all the time, and it happens in assets all the time. Netflix, freaking silver, Robinhood, everything. So it's just this weird thing. But I also have confluence here, just about 71s. So it's not, when I say, it's going lower, I would preface that with, it's not like a lot lower, but it's not going up. Although if we do lose that 71 or 70, it's not going to be pretty, because then you could say the same thing. You lose that 70 level, you typically go to the 45s. And I don't mention that a whole lot, but it is what it is. And I also have confluence for that area too. So this is more of sit on your hands and wait. Can this be towards the lows for now? Yeah, but 1, 2, 3, let this breach, and you might get it a little bit lower. I'm just going to check on SPY again. Look at this, man. What'd you say? Wild. Is it a big long though? Don't be caught off guard. Expect resistance to hold. No, it is not. It's a counter trend bounce. To that end, everything in a range bound market is like a counter trend bounce. It's kind of wild. RSP. This is my bigger issue. So RSP has been like the saving grace for the market. I have not seen RSP, which is the equal weighted sector SPY, make new highs this month. And let me just see. Yeah. So 202.5 is the level that RSP needs to hold over. Within 1%, I guess, this is within 1%. The question is here, did we see the high or the low for the month? And at this point, if we can't get back over 202.5 on this ETF, this equal weight ETF, that's what had been, I got to update the script. Okay. Yeah, same 202.5. That's what has been the saving grace of the market. So while SPY decides to bounce here, as you get into that lower high on SPY, make note of this RSP, because two things. IGV is important to watch because it will tell us whether or not we're going to get a bounce. It's just clear right now we're not getting a bounce. RSP is going to tell us whether or not we're going to get a failure at the index level, because this has been what's kind of like holding everything up. This is now starting to concern me more than caring about IGV. So this part, what looks okay, it's holding the channel. It's not a super strong channel. It's at the very low end of said channel. So I think we could get a bounce. But again, 202.5, 203, call it. If it's not making new highs again, then we're going to show weakness in that broadening thesis. And weakness in that, meaning like how this plays out is like maybe value is overvalued, right? Maybe Walmart is too high. Things like that, or maybe biotech pulls back, or I don't know, whatever. Financials not having a good day today. Other sectors, aside from IGV, start to roll over, and that will start to show up in this equal weighted ETF. So right now, this is my focus on the trend. So as long as this trend is intact, you kind of default to assuming that it's going to stay intact, but I have a little extra sauce in terms of, knowing the trend or defining the trend in it from a systematic perspective. I need to see this back over 203s in strength and hold. Otherwise, I'm way more concerned and I'm not optimistic. So that's where I'm at. I'm on the edge, but I think it's a little too early to stick that turkey in the oven. We're still preheating. But there are things like silver and gold. You know, I thought this could be 85s. This is SLV. It's really close. 87s, maybe a little bit more GLD. Holy shamoly. She's breaking. Well, that's a big break. These look great, right? So this thing's, I think of my FCX. FCX, this is the debasement trade. Debasement trade is still on. Debasement trade, honestly, wild. That has some data center spend in it. That's like any commodity. So, you know, anything, a lot of things on the periodic table do okay. I think I'll zoom out on this. This is a massive base. So if this breaks out, this could be a big trade for the year. So this goes on one of your top watches for the entire year. Honestly, I know it's not fun, but look at Chevron, right? Look at these stocks. There are good stocks in the market that are like really on pace to be like, holy crap. If this breaks out, this is 250 maybe for the year, which we're almost there. 190 would, holding over 190 would basically do it. But this is a very long-term chart. Most people are not looking at this. 225 to 250. There are very good charts out there that are like not what you typically look at. But let me go. Energy. Well, this is Deere. I don't know. I mean, this is wild, right? But that's how one of these charts that long-term ends up looking totally sideways, turns into an absolute face ripper. This is weekly. So from this year, it's up 50%. John fracking Deere. 175 billion. That's crazy. Look at this. This. No, do you want to chase these? Probably not. And that question of like, do you want to chase these? Probably not. This, if these start pulling back, this is what the RSP represents. And that is what is kind of concerning me, right? So like if these things pull back all of a sudden, you're like, holy crap. This is J&J. You can't see these things unless you're on a very long-term view. But big consolidation, I like J&J. What I will say is that we're just a little extended here. I don't want to see J&J lose 230. She loses 230, then I'm below the 20-day. I'm losing the trend. Right now, she's strong, and I can see 260s, potentially 275. But I got a first stalling candle. Can she make a new high? I don't know. But you look at a chart like this and you're like, oh my goodness. Golly. Where have you been? And it's just like wild. So let me scroll up on the chat here and see. So that's the sentiment. That all of this stuff that I've been talking about is like, this is the market that we're in. And that is why you want to start looking at things. Watch these, not to trade them, but watch for the broader, as an investor, watch. So Tassie, first request up. 415, I know, you should know if you follow me at all, is the magic number. We lost 415 last week. I expect this to continue to the downside for the meantime. Tesla does what she does, right? I'm now hedged on Tesla in a straight up collar. So it's like I've sold $400 calls for 2027 a while ago. I'm now short also. So it's like, well, it's a big one. Does it go all the way down? I think it has a decent shot of doing it. But I also own the stock, right? So I'm hedged on the stock because, look at the chart. We'll probably go here, but we lost a huge level. And, been talking about this for a long time. But regardless, this profile on the right hand side of my screen. Again, if you want to learn about this stuff, you take the apprenticeship, and that's where you get taught a lot of stuff. This is like my roadmap from a trading perspective, and I would expect to leave. It looks like a mountain range on the right hand side, so we just call it like, peak to peak is what we say. So I say. It's not like an official thing. I totally made it up. But yeah, like if this is, I'm leaving Mount Vesuvius and I'm going to Mount Kilimanjaro. That's literally it. But this is my trade plan. This is my roadmap. I'm literally reading a map, and I should see some acceleration from a price perspective down to that area. Which, by the way, I mean, look, it is what it is. I like the company. But I have a lot of confluence into like 320, which was where it just broke out from. Do I like it there? Yeah, I like it there. I mean, I like it there better than where it is now. But this is lost trend, and so how long does it take to do this? I think is a more appropriate question. Now, Tesla moves fast typically, but if you see this, it was this 415, and so anytime. As a trader, you're looking at this and it's kind of like rejecting 415. Even Friday, you get to open below and then you retest it right intraday. This is multiple tests. So now you gotta test support. You're at least gonna fill this 389 kind of session gap and test the lows here, which is about the 200-day. But look, short term, I mean the 200-day symbol can create a little counter trend bounce. But watch that 415, because if you get that, I again expect support to hold and resistance to hold. So we could potentially have that. But by the time we're retesting the lows again, what is this doing? I think that's a bigger question. The more times that we test these lows, the higher probability they are to actually breaking. And the more times that we have a lower high, unfortunately, this is the current channel that Tesla lives in. So it could get all the way up to 425 and still be a short for right now. Because you can kind of see it on the chart, like your support or resistance now goes up to that area. But yeah, it's moving what we call this in strength right now. So you're in an active move. Can it get a counter trend bounce? For sure, especially if the news flow changes, which is wild because Friday, we had another headline. Friday, Cybertruck 60K, 60,000 version of a Cybertruck. That's pretty good. Would any of you guys buy a Cybertruck for 60,000? I don't know. Would you buy a Cybertruck for 60 grand? I heard it's a good deal. I didn't like the Cybertruck though. It was the one wiper blade that just really got me. So I don't know. It's insufficient. It's wildly insufficient. The one wiper, that's it, right? The one wiper blade, wildly insufficient. Cannot drive that thing in a rainstorm. For like, it did not have a good experience. Didn't do it. So, but 60K is a lot cheaper than what it was at 100. That's true. Sammy, I don't. Some of these, you guys, I don't know. So if you're requesting things like a small cap stock crml, debasement trade. So think about that. Think about what are we talking about? That's from Sammy Lee. I spent a lot of time talking about the underlying story of the market, the theme, right? So you up 11%. It's a small cap, 1.2 billion. You have a high beta, small caps, extreme high beta. So while like my Microsoft might be down from the highs of what's Microsoft down? Let me just see. It's down a good chunk, but it's not that bad. It's down, well, shit. It's down 30% from the highs. Microsoft's down 30% from the highs. Hello. All right. Microsoft's down 30% from the highs. Amazon is down. God, I did not notice that. Amazon is down 20% from the highs. Apple is down, not that much at all. Actually looks like it's having a green day today. Goodness. No AI rhetoric, down 6% from the highs. Dude, Apple's about to hit 270. No AI story, right? And tariffs. So that's good for like an Apple. I mean, that's no AI exposure, and tariffs are worst case scenario. There you have it, right? So that's but anyways, so that is what you have to think about when you're picking your stocks. Look at this. Are you joking? For real. Also, 260 was that prior high. So is this a safe place to hide? I mean, you can hide here. Is it safe? I mean, that might be a different question, but it does not have the same exposure as the rest. Like, that's not bad. Shockingly, looks like it's about to squeeze to the upside. No AI exposure. Tariffs are as bad as they were ever going to get. There you go, right? That looks like a buy to me. That really looks like a buy to me if it can hold over this level. Now we're super squeezy. But I would, as a trader, like, or an investor, you buy this, but you don't want to see this losing 250, which is not that much to risk, like from a risk reward perspective. There are things like, this OSS, I think is small cap. I think it's ultra small cap, but that doesn't have the full story. Here's the other half of the spend story. So SMCI, Dell, OSS, Arista, things like that. And if you play that tape out, and what we're seeing in the market is very clear. We're seeing this. So we're not questioning whether or not they're going to spend. What the market is questioning is whether or not the companies that are spending the money will continue to have it forever, right? Or in perpetuity, or will they run out first? So if you're a small cap, you're going to have extremely high beta, which means that you have the risk of going down 80, 90%, whereas maybe Microsoft has the risk of going down 30, 40% if you're dead center. Now, the sentiment and rhetoric of the market will turn on a company like OSS, like boom, if we start seeing some of those companies actually go under, or we stop seeing that spend accelerate. Because if they don't make the money up, like continue to make money, they're not going to be spending at the same rate as before, which is why things like the neo clouds are stuck, right? Why things like Arista is probably less than stuck. Oh, it's stuck. So that is what you see here, right? OSS looks pretty stuck. That is the market story. It's the story that the market's telling us right now. Things like Crowd. This is InfoSec. And these are the ones that I can understand from a valuation perspective. Trend is gone. Down 10% today. $40 drop, 10% on CrowdStrike, ahead of earnings. They're scared. What I would say is CrowdStrike almost always goes down on earnings and then ends up being a buy. Here's earnings here, big drop. Here's earnings here, drop, right? Here's earnings here, up, drop. Look at it, right? Drop, drop, dip, drop again. It held though. So here, earnings, drop. It always, and this one, they're just front running it. They're looking at Palo Alto. They're like, no. I think we have Zscaler later this week as well. I don't know. This looks soon, March 3rd. So Zscaler is going to come before CrowdStrike. InfoSec is the most resilient sector long term, but this is not a question about resilience in this chart. This is a question about growth. There's no question that their cash flow is going to be there. It's more this being a question about growth to me. So you might see sub 300, but just from a chart perspective, we just know this trend is gone. It's a long-term trend, but first stop 329, second stop 260. So right in here, that's what I would say is in the cards, is close to the 200 week. That the purple line on my chart here, that is a 200 week simple moving average. But momentum, when you lose something like this, that becomes, so this is what they call a death cross. I mean, you know, I don't know. I'll talk about this. I'll probably talk about tomorrow with our boy. These death crosses here, where the 50-day, which is my blue simple moving average line, crosses below the 200-day simple moving average, is a typical technical sell, like retail. It's a typical retail sell signal. I'm not a believer in that as being like super accurate. Like here, but so here's my point. The sell-off starts way before it. Here is the last death cross on CrowdStrike. Now, these are super lagging. So it's an extremely lagging moving like indicator. This death cross was not the low, but it was pretty damn close to the low. Like if you sold this at 275 last time CrowdStrike had a death cross, I mean, sure, you might have made like, I don't know, $30, but you effectively sold the low. So like, I don't jive with that. But that said, this one does not look great. I would maybe wait a little bit, and see how this goes, because to me, it's like, yeah, momentum's gaining here, but things like this, and I will say this for you guys, my fellow hoodlums, our hoodie has officially made its death cross, if you didn't know. And it did, it's not dead to me, but things like this, you have a death cross here. This is not selling the low, right? So, I mean, 219, it's a momentum indicator is what it is. We want to see what happens after the fact. God, that's an ugly chart too, Zscaler. Good night. This is getting out of control. Ahead of earnings, like what are we doing right now? This is valuation compression. This is PE compression. And so it's risk off is what it is. These are high growth. Not that they're not sustainable companies, but it's high growth. Connie's asking for SoFi. Asked. Yeah, not a good looking chart. I think I said 14 before. I will say 1697, as close to 17 as you can, if you have not bought this $20 dip. Below 16, yeah, you're going to see the depths of despair. Is it 14? You know, this is my roadmap, right? So I can see this happening. This is 16, 1590. We call this a point of control from the prior consolidation. That's 1589. I mean, so maybe 14 is a little aggressive, but I would as close to 15 as you can if you like it. And then not again until you see 10, if you see 10. But because I don't want to be buying here and then continue to buy. I'd have to have it make sense. So if you bought it at 20 and then you bought it at you know, sub 15, that makes sense, right? $30, 30% discount. At that point, I'd be waiting for a 50% discount, and I'd just be like, nah, chill, relax. But in probably September, because these are headwinds for the market, like just seasonal headwinds. So there's 14. This has to hold. So technically speaking, if this does not hold, so we know from a trading perspective, this extremely high probability of happening. This, if we do that over 17 and 3/4, this actually has an extremely high probability of happening. What you don't know, that I don't talk about that often, 78, 60. So typically there is another fib that I don't usually actually pull out because I don't typically need to, because I'll be able to find a spot in the chart that we call a fair value or price of interest. That happens to be 1450. If you lose this 1697, the next trade is here that actually has an extremely high probability of happening. equally high. So that's why I would just wait. You could snipe the lows a little bit, but the deeper it goes, I want to have cash available to deploy. So that's where that 14 kind of comes from. But again, it's right here in the charts. I don't need another confusing fib level. I mean, SPY keys. So we got this, right? Thank Daniel. Appreciate you. Enphase. So we have First Solar reporting this week. Powers everything, yes. Technically, they're not in the power space, but look at this. This is wild. I mean, talk about a in the dumper stock for the longest time. So the trend is down, broadly speaking. It's probably bottomed, but it's an extremely high beta stock. If this company starts to pivot, which I believe they actually have, if this company starts to pivot, you might have a narration story that is transitional. Like if you have a transitioning, I mean, dude, I don't hate this at all. Don't tell Lance, guys, or yeah, I actually like this chart. Don't tell. I mean, oh my goodness, I legit like this chart. What's happening right now? Okay, so it's only concerning to me because I shouldn't really like this chart. $47's got to clear. It's holding all the estimates. We're going to get some. You just get, hey, here's the opposite of a death cross. That's called a golden cross. Oh, goodness, what's happening? So I'm going to get a little bit minute. Legit, if this is holding over 50 Enphase, that probably has bearish to bullish tendencies moving forward. So your real reversal, I would say, is going to be well over that 50 level. So here's this last here. And 62 is like a large resistance level. So if it can, even if it gets through this, here's 45, but here's that little area. Remember, this is my roadmap from a trading perspective. If I can get through 50, I can easily see it next a stop one more time at the next peak of the mountain range, and just kind of like plan my trip accordingly. It's not a huge, but that is what it was. That's what it would be, and that is the next stop. Yeah. Can you call this to like 100 something? No, you just can't, right? Not until you're well over that. So now you can see it 62. It's showing up pretty clear. You might be able to call it to 120, but that's if it gets over. Well, everybody knows what it would be. It'd be over 70, 72. If it gets over 72, yeah, cool. 120 calls all day long. There it is, 74. If it gets over this right here, we're going to 120s, no question. But we're a little far away. We're 50% lower than that right now. Are we dumpster diving? Probably. Who knows? EOSE, no. So this is actually out of the box here. So this one they don't like. This one, high beta. It is energy. I don't know what's wrong with this. So there might be something else going on. It's at the 200. You could get a bounce, but you got to get back over 11.5. Got to get back over 11.5. Otherwise, I'm looking at a full retracement here, which, yeah, you're beyond this retracement. You'd have to find the next low is at 8.25. But in reality, let's do it from the depths. Dude, this is up how much? 7s. So there's one spot. Here's the second spot. Extreme high beta. Whoa. You know, this might make me eat my words here. This is like from the depths of despair, which is like low lows. I think that's the low. From the all-time low to this most recent high. I mean, dude, this is weird how it turns out this way sometimes. It's probably a buy, but we have earnings coming at the end. No, you got earnings on Thursday, so I can't say. You lose this $10, you go to $7. oddly enough, it lost 12. You're probably going to 7. you regain 7. You probably go to 12. 7 to it's how it works. I don't know. I sound stupid saying that kind of stuff, but Rocket Lab. We asked Rocket Lab before I even pull up the chart. My guess would be, which I haven't looked at it, it doesn't have any of these themes that we've been talking about. It's not in the good spot of anything that we've been talking about, except for maybe war. So that might be the saving grace. If I were to guess without looking, it's probably going to be neutral to bearish. And that's exactly what it is. Neutral to bearish. So it's all about the storyline. What is the storyline right now? So and upside targets acquired. Let's do this. From that low to this high. You're at that retracement, but so there you go. So you already hit this one. It's at $69. It's not over 70. We're not going there yet. It's got to hold this. Otherwise this is the lower end here. It's 40s. But for right now, I think the best case scenario for this guy is that it actually tracks in this range. Assume that this $60 is the low. You're not up and out until you're over 87. So this really takes you up to 80 here. That takes you to 86s. And then if you're over 87, cool. We have this guy at 97, and then you can talk about extensions. But we're a ways away from that. And this is just barely starting. I think this is something that looks like it would play out for over the course of months, not weeks or days. This is probably going to be the same as like ASTS. Yeah, super similar. WDC holding, right? It's in the middle of the theme, right? I don't know why somebody's asking for a Nokia. That's dumb. What are you doing here? Why do I want this chart? I don't want this unless I'm trading. So it's got to be a trade idea. But also no. Resistance is going to hold. You're at resistance. Unless there's something that I don't know is going on with this chart. I just don't know. I don't follow this thing at all. It's a meme. Maybe 8s, 50s, but that's all I would see here. Iren. Neutral to bearish. Kind of held 41s. So not in the, if the story doesn't line up to your stock's theme, like don't expect momentum. Don't. I'm not sure for neoclouds what is the story here. No momentum. I think this does have a little bit of alignment. So we did SPY, we did Tesla. Here's an IBM request. This is an active short for me. But think about what's this. There's a lot of reasons why, but like just simply stated, what I've been repeating over and over and over is the same thing. Like understand what the market story is right now. Where does IBM sit in this current market environment? The truth is, if you don't know, 45% of IBM's revenue is software and services to service said software. What is the software that they're selling? It's legacy software. It's not cheap software. It's very expensive stuff. It's very good stuff for what it is. But if we are also in a generational AI build out at the data center level, Are the companies still buying that legacy software, or are they going to be building new things that might actually replace IBM? So IBM specifically for me being like what was once considered, well, is still considered a value play from a PE perspective. It's like 24 PE or something, I guess. And a dividend stock, 2.6%. The lower this goes, by the way, the higher dividend becomes. So it's whatever. But safe. What's the story of the stock market right now? This is actually ground zero. So because of that, I'm like, whoa, this should have been hit a long time ago. And so to me, this becomes a catch up to a potential CRM, to potential Adobe, to a potential Intuit, which it's a potential ground zero company. Who are their customers? The customers are even worse. It's the legacy customers, the financial institutions, the ones that are being disrupted. Literally Nokia, Eaton. Not that I don't like Eaton, but it's from a technology perspective, their legacy data, old school stuff, very expensive stuff, very good stuff for what it does, but is better stuff coming out, I guess, is the question. And that's the AI anxiety. It's quantum for sure. It is quantum, but is it really, is quantum the thing that's going to hold this stock up at however many $1 billion of market cap? 226 billion? I don't think that's good enough. At least not to, that's just my opinion. I've been right so far. But from this chart perspective, I mean, we're not even really talking about a substantial pullback at this point. Like, we're not even close. We're below 250 for sure. But like, I mean, I have sub 200 here. Like, that's 205, 170. I mean, if you lose 170 right now, I see 205 easy. Just based on what is true on sentiment alone. Trend is broken. You don't even have your death cross yet. We still have earnings coming later. But this would be ahead of the curve in terms of what other stocks have done. This is nothing burger move yet so far. I mean, yeah, it's 240, but oh, am I accelerating? Are you guys selling this off? Is there an IBM headline literally right now? Like, what the hell? That's getting crazy. But I'm not trimming. Like, I have no reason to trim. And you can like IBM all you want, but think about the storyline of the market. There are going to be good stocks. There are going to be poor performing stocks. Am I making this stock go down right now? I hope not. I'm going to shut up about IBM. Let's do meta. Not horrible, right? But bearish to neutral is where we are. So sub low 230s. I mean, it's very possible that we see the 600s again. Now, I don't think that we break range either. So I would say that I would expect 630 this week to probably hold unless proven otherwise by the broader market. But the trend is actually pretty sideways here. And so in a sideways market, I would like to buy the edges. We call trade the edges. Again, something you'll find out in the apprenticeship, which means lower like buys here. If this was resistance and you assume that it acts as support, we're about to find out, will this act as support one more time? But I'm not out of the weeds until I'm over 670. But again, where's my trade to? Just the low 700s, which by the way, we already got one time. Now, if you're still hanging around and this was a trade, well, you got bigger problems. You're probably not the best trader because you're overstaying your welcome or not having a good time in this market. Because just sideways, you gotta assume both support and resistance holds. I'm gonna do a time check. Oh, so we got a couple hours before the close. I'm just gonna scroll through these. I like something. So again, we talked about some. Look at this, Oxy. They're good. I couldn't believe Enphase. Like, what am I doing looking at Enphase? But Oxy, by the way, there's actually a turnaround story happening. Did you guys know that Oxy sold off like a large portion of their company that's going to make them a lot more efficient moving forward? Like even at $50, $52, I think you might be barely beating Buffett's long-term average price. But hey, we got to be a little careful here. Around 58, we're going to come up to resistance. So, I mean, the trade was from here to here easily. And I think that's what's happening. And we're well on our way at this point. It was a little sketchy, not going to lie. I actually was in this trade for a while via options, and I held through a pretty horrendous drawdown. I'm green now, but it was actually, I was long here or something, 45s, and it came all the way down to 38s. But that's my stop from over here. It's support. I expect support to hold. I will, when we get here, probably expect resistance to hold as well, which is going to be just underneath 60. So it could go up, but it's into this box right here. And then after a period of sideways actions, we'll see, do we get another move to the upside, which from an investing perspective, I mean, that would be wild, right? Could be, would be for sure. What do you mean manually driving Tesla? Dude, have you listen, I have an EV truck. I'm currently driving the most inefficient EV that you can possibly buy. That's what's true. That's all I know. But on semi. Or no, this is shoes as consumer. Kratos, yeah, I gotta wait for earnings. So we did Microsoft in a sense. Amazon, look, I've said this before. I'm looking at a 180s. We're looking at a retest, right? We got to 250. It could not get through. This is this close from getting your death cross again. It's probably going to happen. But if you know me, if you've known me for any period of time, I kind of like buying the death cross, or at least the heavy dips into the death cross, which means like my hoodie, this could be 180s down to 150s, which means that my hoodie post death cross, there she is in all her glory. Can't believe you guys didn't even ask for this. I like buying this weakness. It sounds so dumb, but like, it's not been the worst thing for me, but I gotta wait. So after this little death cross, I mean, deep recessionary weakness, that's where I'm at, right? It's in this area. I'm not opposed to trading it to the downside, but I ain't taking off my hedges. And what I'll start to do from here is start to watch for the heavy, heavy dips, which you guys know, if it's below this, I think it's a little bit lower than 50. So it's time to hedge if you haven't, but also take those hedges off sooner than later, because this could happen pretty quickly. I don't think it's going to stop at 60. But this is an ugly, this is a disgusting chart. This ain't looking too good either. This actually looks like at the beginnings of the breakdown. This is also going to get your death cross. So I didn't want to say 85 the first time around when we were trading up here, but it was 85 and it is 85. That's kind of, it's kind of where I'm at. But I could be wrong. We're going to find out. I don't need to do anything this week. We're going to find out after earnings, after a lot of this stuff. Iridium looks, this is old school communication stock. I'm in satellites, dude. There's a lot of good stocks. Amphenol never sell. Yeah. This is Corning, but without Gorilla Glass. And this is at $180 billion market cap. It's just data center. Wow. Just data center, where Corning is more than data center at 120 billion market cap. Could it be extended? For sure. It could be. AMD. I mean, so the semis are weird. It's got the data center spend 190s. I mean, I see 150s, guys. So my point is that I don't think this dip is a one to get super excited about, but it is one to nibble. And then if we get a bounce after March, how strong those bounces are really determines where we go from there. I mean, even Nebius. I looked at Iren, I looked at Cypher. I would assume that Nebius is the same chart because they're all in the same theme. Yeah, same chart. I mean, look, 108. 108 is resistance. This is 108. I mean, neutral to bearish. This thing, I don't even know what to do about this. Reddit. It's not a good looking chart at all. I hate to be bearish because like right now, because I'm an investor, so I'm naturally bullish. This is so like opposite. But so here's the low to high retracement. This is what I'm talking about. You lose this 147, which is like the ideal pullback. If you don't have an ideal pullback and this is the bottom basement bucket for a potential pullback. You can't get over 150. It's not a pullback. It's a straight up reversal, which means that you see the lows again. So that's why it's so concerning. Was this the low? Nah, TBD, right? Could you see sub 100? Yeah. Especially if this loses, 120? But it hasn't yet. So in order for this to survive, it's got to get over 155 and then ultimately over 180 because tradable range is here. This is a tradable range. It's counter trend, but this doesn't initiate until it's over 155. Between now and then, it does not look neat. You know what other difference there is between an investor and a trader? A lot of investors anticipate and the profitable traders don't. It's literally just reaction. I'm reacting faster than others, but in real time. So it's like, this is a perfect example. Do you anticipate that this is going to get over 155? Because if so, you're investing. That's more in the guessing game. And you better be prepared to hold for more than 3 years. And if you are, absolutely all day long. And also, by the way, if it goes below 100, buy it again and be prepared to. But from a trading perspective, you don't want to anticipate that type of reversal. You could anticipate this type of breakdown because you're not anticipating. You're literally reacting to rejection off 147 and planning a move back down to these lows where this next is probably going to be in here, 118. Yeah, 113 area is. And then that's your trade. Literally small trade, but it's from here to here, right? And this is you're going from one end of the mountain to the other end, and you're just traversing this valley right in there. That little valley is your highway, your speedway, where momentum accelerates and where a good trader likes to live. So that's it. We've done a lot. I can't even catch up. I'm not even close to the beginning here or to the end. But BM&R, wait for zero. So I kid. No, I mean, you have to ask yourself where does this Ethereum, crypto, any of that sit in the story of the stock market that we've been talking about this whole time? It doesn't have a good place. Show me 5. I mean, this next move would be, 10s, 11, 1150, 1155. Not from this historical, but it is aligning, but it's just, here's resistance. One more time. There's no part of this trade. There's no part of this that looks bullish. There's nothing here that you could confuse yourself with being in an uptrend. So that's the difference. Are you anticipating? Or are you reacting? Nothing bullish here at all. Even sort of kind of maybe not even a little bit. You lose this support here. You see at least 13s, likely low 11s or 5. Not a joke. And that is, so below 18 and a quarter, you're seeing that. Below 18 and a quarter, you're seeing that. Is what it is. So is $20 a good buy? If your time horizon is over 3 years, sure. But again, be prepared for lower. You never know. You never know. So things can change. Right now, the sentiment is the sentiment. The sentiment is the sentiment. And until that changes, nothing changes. Nothing changes as nothing changes. So that's got to change. We'll react to it when it happens. But that's what it is. There's good stocks. There's bad stocks. There's oddly strong, wanting to be strong. We'll see TBD. Not in the blast zone. Apple, wild. We'll see. Yeah, and ETH, depending on ETH, like ETH could be like real bad. I mean, we're at 1850. So like if 18 gets lost, you don't even want to know. Like you don't even want to know. Like if I threw a number out there, it's gross. So like I could say $100 and it's 1250. I think realistically here, this is a normal cycle. I think for crypto is a 70% drawdown or more, right? We're close, but it's also when you get to that point, you're not a V-shaped recovery or even like a U-shaped recovery. It's more like a 2-year base before anything happens. This is 62% drawdown right now. This is 70. So if that's 70%. That lines up with the 2018 highs. Typical crypto winter. I mean, you're deep in it. So like, what's the issue? Deep in the crypto winter. The equivalent 2018 high retest on Libidity coin, oh my goodness, is where a lot of OGs are at. Right in here, 20. That's it, right? Like that's it. That's full blown. But it's too early to call that right now because 54 is where we should go. Because right now you have this same setup that we've seen over and over and over again. Where are we going? We're going to 54, 55. That's what's happening right now. It's not in question. It's extreme high prejudice and high probability to go right here. Now, when we get there, can we do this? For sure. But expect that to be resistance. And this little box will happen one more time. That is a 1-year sideways price action. Expect it. So is this the dip to buy? You tell me. It's a dip. But, yeah, and what's the risk? If we lose 54, it's just I'm going to have to bust out some keys and some cold storage or something. I don't want to do that. Oh, there you go. Thank you. There it is, right? So like, that's the rhetoric of the market. I'm so not selling my shorts, but should this have been expected? What did I talk about this whole however many hours? This is it. Literally my post. Do you guys see my post? Like, I mean, dude, like, what do you want? This is easy money, you guys. This is some of the easiest money I've seen in a long time. It sounds dumb, but like, when you fight it, it's not. But like, when you stop fighting it and you figure it out, it's like, hell yeah. I'm an investor, by the way. So like, I've said that a bunch of times. Like, I like stocks. I'm not anti-stocks. Where's my IBM post? We will eventually take profits. This is it. The safe dividend stock. Think again, right? 45% software and sold to companies running. Boom, there it is. I must have spelled COBOL wrong. Or you did one of the two. TSM sells to the AI revolution. IBM is collecting rent from legacy companies afraid to move on. They're going to get either displaced. Those customers are either going to die, migrate off the old legacy systems, or they're going to get replaced. But they're not buying what they were buying before. That's at whatever that is, 280. What are you at today? We just hit 230. I'm in the money, baby. Anyways, trading's great, but this is what trading's about. Legitimately, like that's a good. It's cool. It's for a trade. If you're long IBM, I'm sorry, right? But the writing was on the wall. If you pay attention, right? And you could have hedged, and you could have bought more IBM, but you also know when to buy it. And I just told you about 170. Think about it. Maybe, which is another $50. This is my debrief on the, did this X algorithm suck so bad? I took like 20 minutes to try to think about how to write this. Trump's justice, this is on the tariff news, flipped on him. He calls them disgraceful. 6-3. Here's the backup, right? It's weak. The backup tariffs are 10% global, 15% cap, 150 days max on the 15% cap. It's a weak backup, but here's the red X. But that's section 122. There's something called section 232, untouched, steel, aluminum, autos, no cap, no limit, 12 more investigations. Pharma, semis, unfortunately my Boeing. 232 is not horrible compared to the IEPA nuke, which is could have been horrible, but the nuke is dead. He's still got a little pew-pew rifle. That's basically it. And so that leaves us at a stalemate. 9,500 views, dude, this X. If I had said, it was funny, like I was looking at this, like if Trump had some, good boy quote or whatever, it would have probably done a lot better. The algo sucks, man. Anyways, I'm done ranting. I love you guys. This has been fun. Hopefully you guys learned stuff. But if you don't, if you want to learn a little bit more, you guys know where to go. Hit us up. It's papergains.com at the website. Lots of stuff. Join the server, by the way. Discord community. Just hop in. And if you want to explore the apprenticeship, click on this little explore courses. Book a free call. Do that. Talk to one of our people. I think Pablo's booking a lot. There's a guy named Pablo. He's booking a lot of calls right now. Just for talking to us, we're going to give you something really good. You don't have to buy anything. Doesn't matter, right? But if you want to, have at it. But just for talking to us, we will give you a ton of stuff for free, like a ton. And with that stuff, I guarantee, there's no guarantees, but like you should be able to make a lot of money and then just come back. And if you've made a bunch of money with us, any of the stuff that we do already, this is your education, right? People lose a bunch of money trading, and that's tuition. any way you slice it. There's no reason to pay more than you need to. Is this link live? Anyways, there's some merch. I like the new shirts. And I will be in LA at the end of March with Amit's crew for sure. And then I think we have some travel this year. But it is papergains.com. Head on over, check us out if you like. And I will see you guys on the next one. Adios. Peace out.